Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in, I have no idea how to pronounce this. It's ENI. It's an Italian company, actually, an Italian an oil company. They are an Italian multinational oil and gas company. They're headquartered in Rome. They're considered one of the 7 super major oil companies in the world. You may be quite familiar with this. I've been watching this chart for a while. My alarm went off as we are now approaching meaningful overhead resistance long-term that I'll give you in just a moment. First, let's take a quick snapshot of the fundamentals, courtesy Yahoo Finance. By the way, I did record this video on Thursday, May 26th, 2022. So there's the basic fundamentals. Certainly a large cap corporation. This is traded on the New York Stock Exchange under symbol E. So it's easy to find. And so there you have it. Let's take a look at the charts. This is a weekly chart going back into the mid-90s, almost 30 years. And there are a couple of significant channel formations that need to be mentioned. This one goes back some 7-8 years. We did test it a couple of months ago. We're right back at it again. And there's a longer-term formation that goes back some 13-14 years above it. And so this is a larger picture dynamic. Let's zoom in here just a little bit to show you the same exact formations. And you can see that this descending channel top that is projected off that 2014 high, so this is roughly a 7-8 year channel top, is this week at 31.38, dropping a nickel a week, 31.33 next week. And so this is our resistance. This formation certainly able to contain annual buying pressures, and from here, this stock can fall off in a substantial way. I'm going to show in a moment some 25% or so over the next half year or so. If, though, we were to close above this formation this week by a 1% margin, it would be a significant buy signal. And I'm going to say into later year. So if we close 1% beyond 31.38, that's 31.69 on Friday, May 27th. And if we settle at that price or higher, 31.69, and we've got a last about $1 below that right now, less than $1 below it. So it is certainly possible. And if that does occur, then we actually have longer-term bullish continuation. And by longer term, I would be thinking in the order of potentially 3 to 5 months. It could certainly spill into the 6-month time horizon. And so under this scenario of closing the week above, now even a daily settlement, FYI, but the reason I keep saying a week is because it's already Thursday, and so you're just waiting another day. Friday, May 27th, closing above that formation, 31.69 or higher, 1% beyond 31.38, sets off a long-term buy signal. Under that scenario, you could just go long the stock as a longer-term investment. Some of you might call that a mid-term investment because it would play out through the rest of the year or until we reach that channel top in the low 40s. This would be about a 30% move to the upside, roughly speaking. You could also consider buying far out of the money calls, 40 or 42 strike calls that don't expire for at least 6 months. In fact, I would go a year out, even though I don't think it'll take a year to reach it. It's just that you're preserving that delta by reducing the exposure to time decay or theta. And so I would go, beyond 6 months, let's say, out to a year perhaps, and you can sort of shop around for the proper strike, the proper time horizon. But I would not buy a 42 call, for instance, that expired inside 6 months. I just don't think it's worth the effort. You're going to see time decay erode your trade. Even if you're absolutely 100% right, you could wind up not making really any money at all. In which case, you just load up on the stock. And by load up, I mean whatever proper portion you would find appropriate for your portfolio. So that's the upside. And we're going to zoom in here to take a look at the downside, because holding below this 31.38 formation, as I'm zoomed in here, will keep, what I call longer-term support in reach. And I'm going to say this is a 3 to 5 month possibility. We don't have a sell signal per se. I'll give you some of those in a moment. But honestly, holding below 31.38 or that formation will keep that 2240 rising channel bottom in reach. And that would be a loss, not 30%, but a 25% loss from present price levels, roughly. And so once again, if you're long this stock already, and I don't know if you are or not, but if you are, you could actually consider liquidating in this vicinity. You could sell calls and do a buy right. You could sell at or just out of the money calls that have a healthy amount of premium in it that would actually expire over the next few months, so that you do get that rapid time decay on a buy right. But if you're not in any of those positions and you're just sort of in a blank canvas mode looking what to do, if it's not going short the stock, then you could consider buying, say, 22, 23, 24 strike out of the money puts. I'm calling this a 3 to 5 month downside possibility. It could be sooner than that, but I think inside of 3 to 5 months is certainly in the cards. Holding below 31.38, we could fall over that time horizon down to the 22.40 rising channel bottom, which is rising, I give you, 11 cents a week. And you can monitor these formations through time. You keep a little spreadsheet if you like. You could actually automate this in your Excel formulas quite easily. And just monitor these levels. You even put alarms in, I'm quite sure, with Excel. I know people who do it. So that's just an idea I had on the spot. Holding below 31.38 will keep 22.40 in reach over the next 3 to 5 months. So you could buy 22, 23, 25, 24 strike puts that don't expire. I'm going to say once again, 6 months out or so. If you went 3 months, once again, you could be completely 100% accurate on the trade and not really make any money whatsoever as you go into expiration, even though the stock by that point may be trading at $23 or $24 a share. So you want to go 6 months out or so, so you've got decent delta on the way down. So that is the big picture to the downside, with 31.38 being a significant pivot point, above which the low 40s anticipated, below which the lower 20s. And that's sort of the big picture right now. And on the way down, I'm going to give you a couple of points. So this is more near term. So if you're more like into the 3 to 5 week mode, a couple of months out, and we're testing 31.38 and you're itching to go short in the options, you could buy a 26 strike put that doesn't expire for at least a couple of months, something like that. I'd go 3 months out just to give it a little extra time. You're going to spend a little bit more money on that further out option, but once again, you're preserving the delta, the rate of change of the option relative to the underlying, and you're not as subject to time decay. And then the other level I will give you on the way down is 22.21, and there's nothing more than a series of highs and lows over the last few years, and it is consistent right now with that 22.40 channel bottom. So it's sort of stair step, but I do think holding below 31.38 will keep 22.40 in reach over the next 3 to 5 months, and I think that pretty much covers it for this particular stock pick on ENI. I don't know how to pronounce it. My apologies, but it is an Italian conglomerate in the oil industry, and you can look it up yourself. Anyway, that's all I've got for this particular Wicked Stocks video analysis on whatever the name of that stock is, symbol E on the New York Stock Exchange. You have a great day.